How's it going, guys? This is Forensic Forex Briante, and I'm back with another video. This is episode 46 to the Asia Session Library. With the same pair US dollar versus Japanese yen for this series, we're going to be looking at April the 2nd, 2024 on a Tuesday. So keep in mind, it's a Tuesday for this example. We're going to be looking at our buy side and sell side liquidity pools that are forming during this time period, so we're able to trade the Asian session. This time period is 12 p.m. to 8 p.m. New York Eastern Standard Time. More than likely during this time period, what I like to call as the New York lunch session, also known as the dead zone, prior to the Asian kill zone, the market is going to consolidate. And we want that. We want buy side to be built in and sell side to be built in. And you can see how the market engineers these equal highs and equal lows. Let's mark them off. So we're taking all the unbroken swing points via 15-minute time frame. So on a 15-minute time frame, that's how we're framing it. We're looking for all the swing highs that we have, and some of the swing highs might be double tops or equal highs. But once it's a swing high, we're going to mark it off. And we're only going to take the ones that are unbroken. We want that on our chart. So that's the data we want to see on our chart. There's another one here, but you can see how it's a double top to that. One here. So these are all relatively equal highs, as we can all see. These swing lows we can't take because they've already been broken. They've been liquidated already prior to 8 p.m. Going into 8 p.m., which ones are still available? That's what we're looking for. Let's play it forward. You see price comes down quickly. Takes out this one I forgot to mark off. We don't have to mark off every single one, but it's very crucial to see what liquidity pools you have available going into the session. You see instantly within this candle, price comes down within the 15 minutes here. It takes out this swing low. It takes out this swing low. While doing so, it pulls traders to the downside because we know retail traders are looking for a break, retest, and possibly go short. And they could be correct in that analysis. But oftentimes I like to go opposite to where price is trying to pull traders visually by the eye, physically too. Like it's a large candle going down. A lot of traders will be induced and want to trade in that direction and chase price. I don't want to chase. I'm trying to be counterparty to the liquidity pools that are broken. So you can see prices below the Asian Open. This is 8 p.m. Anything below the Asian Open is a discount. Anything above it's a premium. The fact that price comes down and takes out sell side liquidity, we know that we're in a discount. And we're also taking out counterparty liquidity pools to potentially sponsor longs. I'm looking to be a buyer here, not a seller. I don't want to be a seller. Most people would look at this and say, I want to be a seller. We're not looking to sell, we're looking to go long. After rating sell side liquidity pools, we have to stalk the setup on the 1 minute time frame. So we go down to the 1 minute. Now the entry technique needs to form after breaking the sell side liquidity pool, and most definitely the most crucial part, it has to be forming below Asian Open because we're trying to get the cheapest buy possible. You can see here this very first fair value gap that forms, price trades into it. You can see how there's some respect to that. But that's not what we're looking for. The entry technique we're looking for is a fair value gap that runs a swing point or swing high, and the swing high is inside the fair value gap. So let's see if we get that. So let's go forward, play it forward, and we're just stalking. We're watching price. And we keep watching. Price hits the Asian Open, sensitive price point. We still have no entry. We still haven't taken out buy side yet. So we still took out sell side, but we didn't return back to buy side. So that revert to buy side has not happened. Only the purge. Still watching, and we're being very patient. And there we go. There goes the entry technique. Let's zoom in here. As you can see, there goes that fair value gap, and there goes that swing high. This swing high is inside the fair value gap. It's not on the start or the end. It's right in between the 2 points. So this is the entry technique that I'm very crucial about looking for. I'm looking for a one-to-one scenario. Now you could risk 1%. You could risk 0.5% too on this trade idea. Whatever you're comfortable with, and you believe in the model and you frame it well. We have no fear in losing because, one, look at the entry that we're going to take. This entry technique is going to be in a discount below the Asian Open. We can even see our projection or our pathway to profit reaches what? Are all the buy side liquidity pools that we potentially want price to target. So we're going for 15 pips for 15 pips, a one-to-one scenario. And let's play it forward and see what happens. So we would be long, and we can see instantly we get more than 10 pips. So once I get up to 10 pips in profit for the trade idea, I like to scale out, take partials. Now you can move your stop loss to break even, or you can have a trailing stop below some type of equal low or swing low. But at times you will be stopped out. Trailing stops get stopped out very often. I think that's something people don't realize. I'll play it all the way through. And that's the end of the Asian session. So going to the end of the Asian session, we can see we're still in profit. But there are many times where we see that we leave the Asian session and we're still in drawdown. I don't absolutely just collapse the trade because I'm out of the Asian session. There are times where the Asian session will continue running on into the next true day open. So going into London and New York the following day. And we see that many times. Now, this is a Tuesday. And if we were still holding, let's see what happens going into the next day. We can see price hits our TP, 15 pips, and then some. Price trades up higher. So you could potentially see more greater rewards on certain days. Now, not to say it's going to be a trade that's going to be able to hold forever, but we've seen examples like that where the trade does hold on for several weeks or for the almost entire month sometimes. But certain days specifically give us a larger run for reward going into the next trading day. So Tuesdays, very specific day.